All right, so today we're diving into something pretty massive, Rakuten's 2023 annual report.
Yeah, you could say that again.
You want to know how their business is doing, what they
Mhm.
did last year, what their plans are for the future, and, well, we took a deep dive into their report.
Deep dive is right. This thing is dense.
It is, but honestly, we found some really fascinating stuff.
Absolutely. There's a lot to unpack here.
There is.
But one thing is clear. Rakuten's not just an e-commerce company anymore. They're really trying to position themselves as a global innovation leader. And I mean, that's ambitious.
Really ambitious.
Yeah.
And to understand that, you want to break down their different business segments, see how each one's performing, and, get a grip on their strategy for growth and how they're creating value for shareholders.
Yeah, exactly. So should we start with the basics?
Let's do it. Most people know Rakuten for e-commerce,
Right.
but their report actually shows they operate in three main segments now: internet services, fintech, and mobile.
See, that's what makes them so interesting. They're not just sticking to one thing. They're trying to build this ecosystem. Be your one-stop shop for everything, shopping, banking, even your mobile phone service. It's a pretty bold approach.
Okay, so no longer just like adding things to your cart. What exactly falls under each of these segments?
All right, so internet services, that's their foundation, right?
Hmm.
That's where Rakuten Ichibo lives. That's their huge online marketplace in Japan.
Okay, so like Japan's Amazon, essentially.
Yeah, you could think of it that way. But it's not just that. They also have Rakuten Travel and then some global brands you've probably heard of.
Right.
Viber Kobo for ebooks, and Viki, they do streaming for Asian content.
So a pretty broad reach already. But
Yeah.
how is this internet services segment actually doing? Is it making money?
Oh, it is. Domestic e-commerce especially is a real powerhouse for them. Look at their gross merchandise sales, their GMS. It exceeded 6 trillion yen in 2023.
6 trillion. That's a crazy number. What does that actually tell us about, like, their position in the Japanese market?
Well, think of it this way. That's bigger than some countries' entire GDPs.
Wow.
So Rakuten Ichiba isn't just a website. It's really woven into the fabric of Japan's economy.
Okay, so internet services, solid foundation. Let's move on to fintech, which honestly always grabs my attention. So we know they have Rakuten Card, but what else is happening in this segment?
Yeah, so with fintech, it's all about integrating those financial services into their ecosystem, right? They want to be the place you go to for managing your money.
The one-stop shop, yeah?
Exactly. So they have the Rakuten card, of course, over 30 million cards issued, which is huge.
Wow.
But then they also have Rakuten Bank and Rakuten Securities.
So they're really trying to capture more of their customers' spending by offering all these different financial products smart, especially if they can get people using multiple services.
Exactly. It all ties into their membership value idea, which we can dig into later. But basically, it's all about creating that loyal customer base, getting people to use Rakuten for everything.
Okay, on to the last segment then, mobile. This was their big move, becoming a carrier. How's that going?
Yeah, this one's definitely the most disruptive. They really shook up Japan's telecom market, which is usually pretty rigid.
How so?
Well, they slashed prices, drove down the national average by over 60%.
Whoa, that's aggressive. What was the thinking behind that?
Well, they wanted to grab attention, disrupt things, get a ton of new customers quickly. It was a risky move, but definitely got people talking.
Okay, so we've got the three main segments: internet services, fintech, and mobile, each with its own, growth story and its challenges.
Yeah.
But now let's get into how they actually performed in 2023.
Right.
The report mentions achieving all these, important milestones.
Right.
But there are also hints at some, bumps in the road.
Yeah, definitely. And that's where the financials become really crucial, especially if you're thinking about investing in Rakuten. So let's start with the good news. They've achieved 27 years of straight revenue growth.
27 years in a row. That's impressive, especially in today's economy.
Mm.
But the report also mentions operating losses, right? Particularly with the mobile segment.
Right, right. And this is key to understand. Losses don't necessarily mean failure, especially for a company that's investing heavily in growth, like they are with mobile listers. Investors are essentially betting that they'll be able to turn that growth into profit down the line.
Okay, so high growth, high cost, at least for now. Makes sense. Can we break down the performance of each segment financially?
Absolutely. Let's start with their core. Internet services, they had solid growth, remained profitable, and domestic e-commerce was the real star, like we saw with that huge GMS number.
Right, so that segment's solid.
Mm.
What about fintech? They have all those cardholders. I'm assuming they're in a good spot.
You're right. FinTech is doing really well. They've got strong customer base growth, healthy profit margins, and there's a lot of room to expand as they introduce new products and services.
Sounds promising.
Yeah.
All right, what about the elephant in the room? Mobile revenue is increasing, but they're still operating at a loss, right?
Yeah, that's right. And this is what a lot of analysts and you as a potential investor are watching very closely. Their main focus right now is getting mobile profitable by the end of next year. It's a make or break moment for them.
1 year to turn things around. That's a tight deadline.
It is ambitious. They're basically betting on getting more of their existing users, and there are a lot of them, 40 million monthly active users just in Japan to sign up for Rakuten Mobile.
40 million. So they've already got this huge potential market built in.
Exactly. And they're trying to capitalize on that by offering deals and incentives for those users to switch over.
Okay, that makes sense. So we've got a clear picture of the three segments: internet services, fintech, mobile, each with its own growth, profitability, and in the case of mobile, some big challenges. But let's shift gears now and talk about you, the potential investor. The report says no dividends were paid in 2023. So how do they plan to create value for shareholders?
That is the big question, right? Investors want to see a return. Well, their strategy is basically two-pronged. They've got a short-term plan and a long-term vision. In the short term, the priority is getting their finances rock solid, reducing debt, making mobile profitable, and ultimately getting to a point where they're funding their own growth by 2024.
Okay, so batten down the hatches, weather the storm, come out stronger on the other side.
Yeah.
What about the long-term vision? How do they plan to create value for shareholders in the long run?
That's where their whole membership value concept comes in. It's not just about getting new users. It's about increasing the value of each user over their lifetime, Get them using more services, build a loyal customer base, and leverage that for future growth.
Can you give me an example of how they're building that loyalty?
Sure. Just look at their loyalty program, Rakuten Points. It's got a 90% utilization rate.
90. That's nuts. So people are actively using those points.
Yeah, they're earning points, they're spending points, they're engaging with the whole ecosystem. It's a pretty smart strategy.
So they're creating this self-contained world where people are constantly interacting with Rakuten, shopping, banking, using their phones.
Exactly. It's all part of that long-term strategy for creating shareholder value. They're betting this integrated approach will lead to sustainable growth and eventually higher returns for investors. But there's another piece to this puzzle that keeps popping up in the report.
You're talking about AI, right? It's everywhere in this report.
Yeah.
It's not just some buzzword for them. They want to be a full-on AI empowerment company. What does that even mean?
That's the question, isn't it? It sounds good, but what does it actually mean? Well, for them, it goes beyond just using chatbots or automating simple tasks. Their AI strategy is about making AI a core part of their operations across all their businesses.
So less about the flashy stuff, more about making everything run smoother behind the scenes.
Exactly. It's about making the whole Rakuten experience across all their services smarter, more efficient. And that should lead to better financial performance, happier customers, the whole package.
So how does AI play into this whole membership value thing we were talking about?
Well, think about it. A seamless, personalized experience across all their services is going to be key to keeping those millions of users engaged. And AI can be a huge part of that, from recommending products to detecting fraud.
Makes sense. Happy customers, better business.
Yeah.
Any examples of how they're using AI that might surprise people?
One interesting example is they're using AI to make their logistics more efficient and to reduce CO2 emissions. So they're tying tech innovation to sustainability.
Okay, so they're not just talking about it, they're actually doing it.
Exactly. It's a move that should appeal to both consumers and investors who are looking for companies that are taking sustainability seriously.
All right, so we've established that AI is a big deal for Rakuten. It's not just a trendy word, it's a core part of their strategy. But let's get back to the numbers for a minute. The report goes into a lot of detail about their financials. What are the key highlights that someone like me, a potential investor, should really pay attention to?
That's a great question. And you're right, we can't just look at the big revenue number and call it a day. We need to look deeper at the income statement, the balance sheet, the cash flow statement to really get a sense of their financial health. So let's start with that income statement. What do we see there? Well, for starters, their consolidated revenue hit a record 2.07 trillion yen in 2023. That's a 7.8% increase year on year.
Okay, 2.07 trillion. That's massive.
Mm-hmm.
But didn't we also see operating losses? How does that work with revenue going up?
Right. That's where breaking down the performance by segment becomes super important. We've got internet services, fintech, mobile. Each one has its own financial story going on.
Right.
Internet services, being their most mature segment, reported an operating profit of 76.8 billion yen, which is a pretty healthy margin.
A good margin.
Fintech, the steady grower, also posted a strong operating profit margin, 16.9%. This tells us their core businesses are doing well. They're making money, generating cash.
Okay, so the established stuff is doing well. But mobile is the one still operating at a loss, right?
Yeah, mobile is still in investment mode, and those investments are definitely having an impact on their overall profitability.
Right.
But they did see revenue increase in 2023, and they're actively working on cost optimization, trying to make things more efficient to reach profitability.
So spending money to grow the mobile business, but it's going to take time to see that payoff. What about their balance sheet? How much debt are we talking about here?
Yeah, their balance sheet is definitely something to keep an eye on. In 2023, they made some moves to try to improve their financial soundness.
Right.
Well, they did a capital increase through a public offering, raised 242.3 billion yen from that.
Okay.
They also made some progress selling off shares of Rakuten Bank, generated 80.5 billion yen there, and then transferring shares of Rakuten Securities to Mizuho Securities brought in another 52.6 billion yen.
So basically raising cash, selling off assets, trying to get that debt under control. Makes sense, especially with them still pouring money into mobile. But what about cash flow? Isn't that like the lifeblood of any business?
You're absolutely right. Cash flow is crucial. And their 2023 cash flow statement shows some interesting things. They had positive cash flow from operating activities.
Okay, so that means their main businesses are generating cash.
Exactly. But their cash flow from investing activities was negative, mostly because of those ongoing investments in mobile infrastructure.
So they're investing a lot, which eats into their free cash flow. How do they plan to reach that self-funding goal by 2024 if they're still spending so much on mobile?
Right. Well, it's a multi-part plan. Continued revenue growth is key, especially in those profitable segments like internet services and fintech. They also expect the cash drain from mobile to decrease as it hopefully moves towards profitability.
Fingers crossed.
Right. And they're really focusing on improving their cash conversion cycle, basically trying to speed up the process of turning sales into actual cash on hand.
So lots of moving parts.
Yeah.
But for investors, I think the big question is, when will those dividends come back? They didn't pay any in 2023.
Yeah, that's a valid question. And to be honest, they haven't given a firm timeline for resuming those dividend payments.
Okay.
But their CFO has said it's still a priority for them. They know shareholders want to see that return, and they've said they'll start paying dividends again once they hit consolidated profitability and get that debt down.
Okay, so it's a when, not an if, which is good.
Mm-hmm.
They're focused on building a sustainable business, one that can make money and reward investors in the long run. We were talking about AI earlier. Can we dive a little deeper into how they're actually using it to improve their business? It's got to be more than just a marketing thing, right?
Oh, absolutely. It goes way beyond just buzzwords. Their whole AIization vision, it's about using AI to achieve three main goals: operational efficiency, marketing efficiency, and client efficiency. Basically, they're trying to make every aspect of their business smarter and more efficient through AI.
Streamline operations, target marketing better, improve the customer experience. Those are good goals, but how are they putting them into practice?
Let's look at some real-world examples. In their e-commerce business, they use AI to personalize those product recommendations you see. Helps customers discover new things.
Oh yeah, I see those all the time.
Right. They're also using it to make search results better so people find what they need quickly. And of course, AI is great for detecting fraudulent activity, which protects the company and their customers.
Makes sense. Those are great examples for e-commerce. Are they using AI in fintech and mobile too?
Oh, yeah, for sure. In fintech, they're using it to assess credit risk, which helps them make better lending decisions. Also for fraud detection and even personalized financial advice.
Wow, so it's really across the board.
It is. And
Sure.
in their mobile network, they use AI to optimize network performance, manage all that data traffic, and even personalize service plans. It all helps them provide a more reliable service and keep costs down.
Okay, so AI is really woven into everything they do. It's not just a trend for them, it's a core part of how they're building their business.
You got it. They're all in on AI, and they really believe it's going to be a key driver of their success going forward. But AI is just one piece of the puzzle. They also have this ambitious Vision 2030, which goes beyond just profits in tech.
Right. Their vision talks about empowering communities, having a global impact, creating a more sustainable future. It's like they're aiming to be more than just a company. They want to make a real difference.
Yeah, that's an important point, and it's a big part of their philosophy. They believe that innovation and entrepreneurship can be forces for good in the world.
Okay, so it's not just about the bottom line. It's about using their business to try to make things better. But how are they actually doing that? What are some concrete examples?
Well, take their mobile business, for example. It's not just about offering another service, it's about making mobile technology accessible to more people. By cutting prices, they've made it more affordable for everyone in Japan, which helps bridge that digital divide.
That's huge, especially in a country where mobile plans used to be so expensive. It sounds like they're putting their money where their mouth is.
They are. And it's not just about mobile, they're also serious about sustainability. They hit carbon neutrality in 2023, invested in renewable energy, and they're optimizing their logistics to reduce their emissions.
So showing that a company can be successful and environmentally responsible.
Exactly. And they're also investing in initiatives to support women in leadership, promote entrepreneurship, encourage diversity. They're trying to live their values, not just talk about them.
It's encouraging to see a company try to balance profit with purpose. But there's one piece of the puzzle we haven't talked about yet, their corporate governance.
You're right. Corporate governance is crucial for any company, especially one with these big goals. It's all about accountability, transparency, doing things the right way.
Exactly.
Mhm.
So how is Rakuten structured? What are they doing to make sure they're operating responsibly?
Well, they've got a corporate governance framework that's designed to promote ethical business practices. They have a board of directors, and most of the members are independent, which means they're not directly involved in the day-to-day running of the company. That helps ensure objective oversight.
That makes sense. What about things like executive compensation? How are they incentivizing their leadership team?
Their executive compensation is designed to align the interests of management with those of the shareholders. So, their compensation structure is focused on long-term performance and sustainability, not just short-term gains. That encourages them to make responsible decisions.
So they're not just rewarding short-term thinking, they're incentivizing decisions that are good for the company in the long run. That's a good sign.
It is. And it all comes back to their overall commitment to building a sustainable business, one that can create value for everyone involved: customers, employees, shareholders, the whole community.
So we've covered a lot of ground. We've looked at their business segments, their finances, their AI strategy, their sustainability efforts, and how they govern themselves. It's clear that Rakuten is a complex company, a company with a lot going on.
It's been a deep dive, for sure. But there's one big question we need to address now. What does all of this mean for you, the listener? What should you take away from this information?
Right, we've given you a ton of info, but now it's time to step back and see what it all means. So let's wrap up by summarizing the key takeaways and offering some final thoughts. What are the most important things to remember about Rakuten?
Well, I think the first thing is Rakuten is really a company in transition. They're not just that e-commerce site anymore. They're moving into all these new areas: fintech, mobile.
Yeah, exactly. And they're placing a big bet on AI to power that future growth. That AIization they talk about, it's not just marketing fluff, it's woven into everything they do.
And they're trying to do all of that while also being a sustainable, well-governed company, balancing those financial goals with, making a positive impact.
Yeah, it's a tough balancing act, no doubt. They're trying to show you can do well by doing good.
So, big question then. Is Rakuten a company worth investing in? What's the verdict? Ugh, the million-dollar question. Well, ultimately, that's a decision every investor has to make for themselves. There are definitely risks, especially with all that investment in mobile, which is still dragging down their profits.
Right. Investors want to see results, not just potential. So what are the key things that'll determine whether Rakuten succeeds in the next few years?
There are a few big ones. First, can they turn mobile profitable? Hit that self-funding goal by 2024. Second, how well can they use AI to really optimize their business, improve that customer experience, and drive growth across all those segments? And then, can they keep up that strong corporate governance, stay true to their values as they get bigger and more global?
Yeah, those are the big questions. And the answers aren't easy. There's a lot of potential upside with Rakuten, but there's also a lot of risk.
That's a good way to put it. It's a company with a big vision, they've got a history of innovation, and they seem genuinely committed to making a positive impact. But they still have to prove themselves, especially to those investors looking for steady profits and a clear return.
So for someone listening to all this, what's the one thing they should take away about Rakuten?
I'd say Rakuten is a company that's hard to define. They're ambitious, they're innovative, and they're driven by these strong values. Whether they can pull off everything they're trying to do, that's still up in the air. But it's going to be fascinating to watch.
This deep dive has been a wild ride, right? From that e-commerce dominance to the gamble on mobile, from AI shaping their future to this, underlying belief that they can change the world while they do business.
What stood out to you most from all of this?
It's that Rakuten spirit, that, relentless optimism. They really believe they can make a positive impact and be successful at the same time. It's kind of inspiring, actually.
I agree. They're not afraid to think big, take risks, and they seem to really care about doing good in the world. Will they succeed in the long run? Who knows? But they're definitely a company worth watching.
If you're curious to learn more, we've got a link to their full annual report in the show notes. It's dense, but it's packed with info about their business, their plans, their financials.
Yeah, take a look. And ultimately, you can decide for yourself whether you believe in the Rakuten vision.
That's it for our deep dive into Rakuten. We hope you found it informative.
And maybe even a little inspiring.
Until next time, stay curious.
And keep exploring.